Hey, George. Hey, Peter.
Howdy,
How's the market treating you? You're out of the market?
mostly.
How about you, Peter?
The trend is your friend till it ends.
It's that old song. What is it by? It's like an old ukulele style that I remember listening to a long time ago. Let me see if I can find it. So
I
is it
looked at the
trending?
indicators and they're very high.
I personally,
Warren Buffett indicator is 217.50. That's the all-time high since 1970. The Shiller Cape ratio is 39.58. That's only second to the .com, and that's a chart that goes back to 1870.
The cash on the sidelines in mutual funds is at $7.2 trillion right now and at an all-time high.
The fear and greed index is at 53, which is neutral.
what?
It was at 51, so it went up. But a couple of weeks ago it was at 70, which is dangerous.
Tonight was at 29% bulls.
It's not like euphoria sounds, but it's like there's a lot of froth in the market.
That is a contrarian indicator, though.
Let me take a look.
The two IPOs that we had yesterday and today didn't do good.
You're right. The AI is a contrarian indicator.
There's 4 IPOs tomorrow.
4 IPOs tomorrow?
Yep. And there was one today and there was one yesterday.
NASDAQ had 450 new highs today.
It's like, are we getting a Heisenberg? Is it Heisenberg or is it no Hindenburg?
I track it each night. There's no Hindenburg in sight.
Is it because of the new lows?
I've got to meet up some mathematical formulas. You can get it on mcoscillator.com.
Gotcha. I want to take a look at some IPOs. Oh, Picard, Cronex, Pharmaceuticals. That looks like an IPO base. 230 million, 3 billion. Wow. Interesting. Doing well.
Rumor has it that Broadcom is going to take some of NVIDIA's market share.
Some of the people in the semiconductors I was talking to, it's like, hey, Broadcom. I thought it's going to be a synergistic one because Broadcom provides all the hardware to help with the NVIDIA hardware because pretty much all NVIDIA uses Broadcom.
Oracle might be the new leader.
Wait, Oracle?
Yeah, it exploded this week.
What the heck?
Larry Ellis became the richest man on the planet.
I thought that it was George.
Was
Always George. They mistakenly says Ellison. They meant George.
George.
George Criddle. Wow. When have we seen a bar like that in Oracle?
Especially considering how big a company they are.
Exactly. Because Oracle, I thought was a dinosaur, not a.
Yeah, they did a big deal.
Their cloud storage is maxed out, and their 3 biggest customers are Apple, Google, and Microsoft.
Oh, Microsoft.
So those guys are going for as much cloud as they can, and that's where all the surprises came from.
I thought Microsoft using Azure Cloud is finally taking over AWS. They were the top contenders, not Oracle.
Tesla's doing well too.
Tesla.
They had a VCP pattern recently. Now they're
Look at that moving average.
Go to a daily, and it's a pocket pivot, I think.
That's a pocket pivot. Dude, there's multiple pocket pivots. Maybe not this one. But actually, this one's also a pocket pivot too. For a pocket pivot, are you looking back on the past 10 days or 15 days?
10.
Supposed to be 10.
I think I've sometimes watched too much stuff and my brain gets confused about definitions of certain things.
Too many people putting their tweaks on it.
Exactly. Where I'm like, I know pocket pivot's 10, but it's like I've seen people saying it's 15 now, and that's more conservative. I'm like, guys, this is like black magic already. Ooh, a lot of people joining in. Thank you for joining. I see you, Yogesh. Thank you for coming in, Art.
Hey, how are you doing?
We're just taking a look at some of the IPOs, and George did say that there's 4 IPOs coming up tomorrow, which I find absolutely insane.
Yeah, the recent IPOs like Fig, Circle, CoreWave, and BLSH, they are all done bad.
CoreWeave fell off my radar.
It had a massive pullback, but it's coming back.
Yeah.
Not bad. That's actually that might be decent. I'm just gonna set alert for that to see if it ever breaks past that. Cool. I'll just finish some of the formalities right now. We have a good amount of people joining us. I think we have quite a few. Let me go to my presentation slide. I'm switching things up a little bit these days. So, welcome to the Leverage ETF and Growth Stock presentation. As you guys know, most of you guys have been here for a while. It used to be the Anchorage, Alaska IBD meetup. IBD is no longer supporting us, so I've renamed it to Leverage ETF and Growth Stocks. We've had some new memberships coming and joining. I've been chatting with them throughout the past month. They told me, finally, there's a Leverage ETF group that I also trade, and they were very excited for this. So I'm glad for some of us the name is working out. Disclaimer, the information presented is for educational and informational purposes only and should not be interpreted as investment advice, an endorsement, or a recommendation to buy, sell, or hold any specific securities. I am a volunteer and not paid for this presentation. Investing carries significant risks, including the possibility of substantial losses. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making any investment decisions. Neither I nor any associated individuals accept liability for any investment decision made based on this information. Let's get started. For the agenda today, we have 13 items. We just did the welcome introductions. Some people are still joining in, which is great to see. So we'll continue with that on-the-spot stock analysis to let people just start coming in. I did do some shout outs to a few people here and there. Always speak up. I'm always trying to have a conversation on this meetup instead of constantly trying to spew whatever comes out of my mouth. Much rather hear from everyone in the audience. And that's the type of community I'm trying to build here, where not just 2 or 3 people are talking, but everyone's talking, even though it might be me as the main speaker and a few mains, which is perfectly fine. So let's go with who am I? So I already did this a little bit. So I've been investing for 20 plus years. I'm very focused on the past 10 years. I've been very focused on growth and fundamentals. My first ever stock, as most of you guys remember, JDSU, the darlings of the 90s. My most notable win is pretty much a 5,000% gain on NVIDIA. As some of you guys know, I've started scaling out of NVIDIA slowly. I think the market is frothy. On my growth portfolio, I'm 0% invested right now. I'm currently in 100% cash. NVIDIA is in my long-term portfolio, and that's why I'm still holding it. And my passion, why this group, is because it's literally creating a community where we can all discuss different ideas and welcome different perspectives. So let's do some stock analysis. We're talking about IPOs, we're talking about CoreWeave, we're talking about Oracle too, which was interesting. Does anyone else have a few interesting stocks that's on their radar that wants a secondary, if not tertiary, perspective?
I'm in Nebia.
Oh, George?
NBIS.
Thank you.
That's the one who signed deal with Microsoft.
Why this company? I shouldn't say ticker.
I've been in it for 6 months. I like this stuff. I like what they're doing. And I think they're better than CoreWeave.
Could you give us a summary of what exactly Nebius is?
NBIS popped up 3 days back. They signed a very big $1 billion deal with Microsoft. They are providing AI infrastructure to Microsoft.
What the heck is AI infrastructure? Is it just the hardware?
Yep, hardware.
A bunch of data centers. AI is very power hungry, very cooling hungry. So it's hard to get those data centers. So on capacity, so they signed a big deal to get capacity.
Gotcha. Yeah, should I call you NJ or something else?
Call me Nav.
Nav? Thank you, Nav. That's pretty cool. $1 billion deal. What's their market cap? Their market cap's $24 billion, $1 billion revenue. Their sales on a yearly basis is probably about 200 million. So $1 billion deal is quite significant to their bottom line.
Which is why the stock popped.
That makes perfect sense. The only problem with this one is, why have they been losing money in the past few years? I have no clue. If anyone has any insight, because we do see the EPS line just going on a downtrend. Hopefully it does pop up because of the most recent deal. Cool.
This is newer.
Hey, George, there might be something on your space bar on your computer. Your mic keeps going in and out. But George presented Figma. It definitely had a huge pop at 33, at IPO at $30. Not everyone was able to get that initial allocation, but if you had it, in the first few hours, first 2 days, did amazing. And right now, maybe a little bit less, or maybe still is, depending on which side of the market you're at. We'll take a look at a few more IPOs as we go through. If you have any ideas or stocks holdings that's coming to mind, let me know. Actually, what would be a good time for? Let me do a poll right now. I'm going to do a poll of how much are we invested?
What isn't this for?
What is going on? Let's launch. How much are we all invested? The reason why is I'm trying to get an idea of what's going on within our own group. Sometimes we might be ahead of the market, and sometimes we might be a little bit behind. As an overall group, since we usually have about 30 something people or 21 people right now, getting a group response gives us a kind of idea of what people are doing. For example, Nav, how much are you invested? If you're willing to share.
I'm like 70% invested.
Were you on margin before? Then you
No.
went to 70?
No, I scaled back when the market was weak in the spring, and I've been scaling back in, but I've stopped right now because it looks like it's stuck at 70%.
Gotcha. So that means started scaling out, I assume, around when the volatility just ramped up a little bit around over here. And then you probably went back in a little bit as a bounce back. I do worry a little bit about this. Kind of looks like a third wave. So the next one down might be a big down. But we'll see what happens. We got 17 out of 21 people participated. I'll close the poll in 5, 4, 3, 2, 1. And I'm going to share the results with everybody. As we can see in the poll, most of us are pretty well invested. One of us is on margin. 7 of us, it's about 80 to 100%. But the majority of us, if we're looking as a bell curve style, we're leaning towards the right. So about 80 to 100% plus invested. The 0% to 20%, that's probably like George. When I take the poll, I can't vote. So I'm also 0%. So there's 2 people there. So on the 0 to 60%, very few people are invested. So it sounds like most people are still excited about the market and there's still some alpha to be had. Does anyone want to share some of their insights on why they're still invested in the market at 100%, just to help me get an idea?
The charts are telling us to be invested.
I would agree on that.
Haley,
Yes.
it's Mike Herman.
Hey, Mike.
I'm probably the most naive and primitive investor on here. I only play TQQQ. I'm on hospice, so I'm in bed all the time. I watch it until it goes down, and then I buy a few shares. My strategy is I just buy one, because every time I buy, it drops further. So now I just buy one share, wait for it to go down further, and I buy how many ever I'm going to get, and follow it back up and sell either the end of the day or the next day. And I've been doing that for 6 months now. And I'm just beginning to figure out that I really don't know what I'm doing at all. And I'm just as lucky as, that I can still be here doing it.
Nice. I'm glad you're here with us.
So that's why right now, ETQQQ just jumped into another level above 95. And it hasn't been down. It was down to 93 yesterday or the day before, and I bought a number of shares. But I'm only dealing with $2,500. Again, it's very penny ante.
Honestly, you're doing penny ante, $2,500. If you lose it all, it's not too much. You did say that you might be inexperienced, but it seems like you're keeping that number one rule, which is portfolio management. I'm assuming 2,500 is not most of your wealth. It's just a portion of your wealth that it's okay to lose, but it's okay to pay the educational costs to understand the market. So
Let me add that in 2008, I was playing with around 125,000 and lost 40,000 in that drop. And that really upset me. It's been hard to get over that trauma.
Hey, Michael, this is Floyd. Have you listened to the September 2024 Anchorage IBD meetup session where we give a pretty good lesson on how to invest in leverage ETFs like TQQQ?
I've been really sick this last week or so, and I just have not been doing much at all. I'll take a look at it, though.
Yeah, Haley, I think you have the recordings, don't you?
Ooh.
Okay. The September 2024 meetup has a really good lesson on how to pick up buy and sell signals on something like TQQQ, because there's times when you should own it and there's times when you shouldn't own it.
I'm creeping my way up. I made 88 cents the other day, and then I made $70 the other day. So it ranges.
So I'll share something, Haley, with you, Floyd. Every weekend, I do a study of quite a few stocks, and I may look at several hundred stocks, and I noticed that Ciena, CIEN, had a huge gap up on Thursday, and Friday it pulled back slightly. So Monday morning, I put in a limit order at $117 just to say, okay, if it dips down, I'll be happy to buy it or whatever. If you pull up a graph of Ciena, I don't know that I fully understand it, but 117 on the Monday looks like a pretty sweet price, because I forget what it is now, about 135 or something since Monday. And so there's a lot of these high-tech stocks that have been on really steep run-ups. It's pretty impressive to watch them, but under different circumstances, they can have a gap down also. But it is pretty amazing. Or look at the giant gap up that Oracle had. I think it was yesterday. It went up. Larry Ellison made $110 billion in one day yesterday.
Good Lord. That's crazy.
Yeah, on CNBC, they said they think that's the most money anyone's ever made on the market in the history of the stock market. And Ellison owns a big part of the island of Lanai over in Hawaii. He does is he's the largest shareholder in Oracle. Instead of selling shares, he's borrowing money against his shares. But for that guy to make $110 billion in one day, it's goodness gracious. Can I just have 1% of that, please?
Please.
Look at what Ciena's done this week. I don't pretend that I understand why it's doing it. CIEN. If you look at a daily chart, it's just goodness gracious. So oftentimes when a stock will do a big gap up, it will continue to go up. And look at the estimated earnings for 2026. They're estimated to be 75% than 2025. It's, oh my goodness.
Wow. I'll have to take a look.
That's crazy. Now I'm curious how much does like people like Mark Zuckerberg own? Wow, it's only 1% in management. Oh, Elon, 21% in management ownership. Wow. Larry has quite a big share of Oracle still. It's crazy.
Are there any studies that show for the market?
George, one more time, you can cut off partially there.
I'm having trouble. Can you hear me?
Yes.
Okay. Are there any studies that show when interest rates are cut, what the market does?
I looked into other people's studies, and what it says is it depends. There's no clear cut of interest rates cutting. I looked into only up to the 1960s.
So here is what you need to look for. Instead of looking at interest rate cuts, you look at credit spread and you also look at unemployment rate, both together. When both are rising, recession is for sure. It has happened every time in history.
The unemployment report is total BS. They had the June report. They revised it so ridiculously different from what they came out. It doesn't even make sense to put it out. They think they had 147,000, and then they changed it to negative something.
You're absolutely right. But unfortunately, those are the numbers we have to go with. And that's why we have the second part to it, which is the credit spread, because market knows before things come out in the street. So credit spread is essentially you going out and borrowing money, and they go higher when there is more risk. And usually when both of them are rising, then recession is 100% guaranteed. When only credit spread are rising, but unemployment rate is not rising, then you will get a bear market, a correction. That is also 100%.
Which let me show you my screen. I'm on the Fred database. I already put in the unemployment rate. Which credit spread are you talking about? Like yield spread?
Yeah, yield spread, you can do that. Bank of America puts out those. Yep, that's the one. Now do edit graph and add unemployment at the top. You will see can you close that top banner that you have. Yeah, now you can say add line, and there you add the unemployment rate.
Into the last 10 years. So that means we're seeing the high yield index adjusted spread. Let's look a little closer. 5 years. We're seeing unemployment rate ticking a little bit higher. I'm going to get
Right.
going sideways. The credit spread, it's okay. So from this data point, we're okay at the moment.
So credit spread is stagnating or it's finding the base. Once it starts rising higher and unemployment rate is already rising a little bit, it'll start going a little bit more exponential or higher rate. That is where you have a problem in the economy. And that is where you will see the recession.
Take a look at this. People who are watching, these are recession periods.
Right.
If we see a high uptick, which we do see in this little highlighted area, there's a recession right there. Same thing that goes on over here. Same thing that went on over on in 2021. They both went really high. Nothing really came up in 2022 because unemployment was going down, but even though the credit spread was going up. And same for here. Unemployment is going up here, but the credit spread was going down. Generally speaking, that's since the late 1990s. Looks like since the late 1990s, it's been valid. We don't know before then.
So if you think about it, why does that happen? Why both of them go up? And that is where we have a recession. If you think about it, you'll understand that it is true even if you go back in time. Usually credit spread go up when there is more risk, right? If I'm lending money to somebody, I'm not going to lend them at a lower price, right? I want more interest because there is a high risk and economy is not doing well. People are getting laid off, which is what unemployment rate tells us. So that's why they both rise. And that is where you get the recession because there's a lot of uncertainty. We don't know when I'll get my money back. So I'm charging more.
Yep. Because more uncertainty, most people will want to charge more.
Exactly.
Especially if you don't know you're getting a payback for your own money.
And when there is a risk when we don't know what's going to happen tomorrow, I'm not going to hire more people. I'm actually going to lay off more people and save more money.
Because you're trying to reduce the risk.
Yep.
Is this data generated from the unemployment claim? Sorry, I haven't looked at this particular graph before. Like the unemployment data, is it from the unemployment claims or is it from the job creation data? Because the unemployment claims are pretty accurate because those are actually from verified data with people who go and claim unemployment benefits. It's the job creation numbers that are weird because it's survey based. So this is from the unemployment data. It's actually pretty decent.
Yes. This is from Fred's unemployment data.
There's also some discussion about the Fed as having lost control over long-term rates and that the discount rate will influence short-term rates, but the long-term 30-year bonds are being managed by national debt and currency devaluation, and that whatever they do is going to affect short-term, but it's not really going to drive long-term. Like you're seeing in Japan, as rates have gone up almost 3% in a very short period of time. National debt and creditworthiness of the currency is really going to drive the long-term bonds.
Yes, that is absolutely correct. In traditional Keynesian economy, that is absolutely right. But if you have read, or if I will urge everyone to read that, go on Google and search for Mar-a-Lago Accord. There's a lot of discussion about it. Just read some key points about bonds and the whole tariff hoopla that's going on right now. So one of the clauses in there is US government is trying to put a clause during tariff discussions that other countries, especially those who are heavily dependent on us for their exports, will be forced to buy untradable 99-year-old bonds. They cannot trade it in the open market. That is not the case as of now. So that changes the whole financial equation. Absolutely.
Yeah.
It's good for the US, not good for those countries. The real question is who will fall for it.
Exactly. Yeah.
So we'll see what happens. But there are a lot of things in that Mar-a-Lago Accord. It's good from US perspective. If other people don't buy it, what's the point?
Thank you for sharing about the unemployment rate and the credit spread.
I'm just wondering, will they have the cut next Wednesday? Will it spur people to jump in the market? Because a lot of people don't realize that home loans are not tied to what the Fed does. They're tied to the treasury yield of the 10-year
I'm very curious about that too when I looked at a bunch of data.
Hey, George, Floyd here. It wouldn't surprise me at all if they lower rates and the market goes down. It wouldn't surprise me if they lower rates and the market goes up. I don't know that it's correlated.
I just thought your average guy on the street would say, "Oh, this is great. Cheap times are coming. I'm going to jump in the market."
Yeah, but the small guy doesn't move the market.
If enough of them, they certainly move meme stocks. See, Open Door, that thing was 50 cents in June, and now it's $10 and change.
Open Doors. If you guys are curious, this is Open Door. It's like a rocket ship.
Don't buy it now.
I mentioned this last time. This is one of the stocks that has humongous volume. Look at the volume on this one on 21st July, 1.9 billion. That's just insane.
1.9.
What was the catalyst?
I don't know the reason. I'm sure there is some news about it, but you and I are not buying that kind of volume, right?
Ellison.
It's the institutions buying that kind of stuff. There is a method to the madness to trade these kind of stocks. Go and do a study on all the stocks that have 1 day volume of more than something like 50 million. And of course, not high mega cap companies, but small cap companies. And you'll see a particular pattern that emerges with those kind of stocks.
This is hard to hold.
Guys, this is Floyd here. I'll make a statement, and I'd like to get feedback from people. When I see something like Open Door or the movie company that went way up, I view that as static information that doesn't influence how I invest in growth companies. I find it interesting or entertaining, but it doesn't affect how I invest. And I don't know, what does other people say?
I think it's just a meme stock. I stay away. It's too dangerous.
I don't invest a big chunk of my portfolio in them, but I'll take a 1 or 2% position. And if it works, I can make 10x or 50x on it in like a couple of days
For
with a very small risk.
There was another treasury company that just went through the roof. Right. Just recently. Went to 80 something.
I'm not sure which. Anyone have any ideas?
It's gone down tremendously. I think it was at 19 or something.
This would be a good segue. So there's one thing that I've been working on in the back end, since I'll just announce a little bit earlier. Way too many slides. It's pretty much doesn't matter. Pretty much. So what I've been doing on the back end is all the historical videos. I am still working with Floyd with this. I'm trying to make every single video in 4K available on YouTube, so all of us can watch all the historical stuff. There's a lot of gold nuggets from previous power trends, previous things that were said. And what I'm also doing is uploading all the videos onto my OneDrive, so that will be available for a very long time. If you want to not use YouTube and give YouTube your information, you can download directly off my OneDrive onto your computer so you can watch it at your own time and pace. So what I've done to the videos is that I've reduced the video length a little bit, usually about 30-40%. James, to answer your question, I'm going to release these after today. So I'm going to make all of these public. But please let me know if there's certain spots of certain videos that should be edited out. Let me know the timestamp and let me know the video, and I'll happily take it out, especially if certain things that are said are unsavory. I haven't been able to watch every single video yet, but I've taken out some stuff here and there that are a little bit more unsavory that shouldn't be at the public eye. So I'll release it publicly. Is everyone okay with that?
Sure.
Yes.
I mean, by
Let's say I drop an F-bomb one too many times. I have a tendency to swear a lot.
okay.
There's something that happened. Oh, someone accidentally turned on their video and they didn't mean to, and they got caught in a situation. I didn't catch that when I was watching it. Please tell me, and I'm editing that out.
There's almost none of that on our IBD meetup videos. I can't think of a single time when there was a segment that IPO should be deleted myself.
Okay.
I agree. I can't think of any.
The biggest problem is sometimes in the beginning, there's a little bit of wasted time. But once we get into the program, I don't recall ever someone speaking up and saying things that I wish they never would have said.
Beautiful. That's what I've gotten as I've been watching through all these videos. So it seems like it's pretty clean, but I might miss stuff since I've been going through a lot of the videos.
Occasionally we get comments by a guy named George.
20 million. Okay.
Not George.
Some of the cool little features I've done on YouTube is that I tried to put titles everywhere. So like we're doing the market overview here, we're doing the back testing and strategy developments, stochastic oscillator and trading rules over in September 29th. So I tried to make titles everywhere so it's a little bit easier for us to navigate on YouTube too. There's also transcriptions, closed captioning, all that kind of nice stuff. So that,
Are these set up so that you can play them back at 1.25 or 1.5 speed?
yes,
Yes.
they are.
That's a really good feature that I find at 1.25 at least, you can get 100% value in less time.
Yes. And also, you can call me crazy. Sometimes we have 5 to 10 second pauses. I've reduced 5 to 10 second pauses to about half a second. So that's how I was able to reduce video length by about 30% in some cases. One video was like 50% reduction. I was like, what the heck? There's been a lot of editing to the YouTube uploaded photos.
Just by taking out blank spots or just by MP pauses?
Blanks, I'm using AI to say, is this phrase before the same as the phrase after? If it is, take one of them out. So both by gapping and by content.
Interesting.
Because I didn't want to just upload it raw. I've been listening to the videos to catch up and see all the historical lessons. I wanted this for myself, and I figured everyone here would want it too. I'm not fully done deploying everything yet because I'm not perfect. In 2024, I'm missing one video. I think it's like April or something. Oh no, or is this December one? I'm missing the December, and it just slipped through the cracks when I was uploading and organizing everything.
If you end up missing one, let me know and I can find it and forward it to you.
Beautiful. Thank you, Floyd. Sorry, I've been meaning to send you an email about that, but it's life.
Yeah, copy me on it too. This is Rick Kelleher, because I've been saving all the ones that I attended with Floyd going back for years. I always archived them myself.
Do we have videos before 2022?
No, I don't think so. Right after COVID, I started doing Zoom meetings and I wasn't recording any of them, to my regret, partly because I didn't know how to do it. A really nice lady was really getting on my case and telling me that I was doing a disservice by not recording them. So I did a Zoom meeting with her maybe 4 years ago. She walked me through not only how to record the Zoom meeting, but then how to download it to Google Drive and get a link that I can send out to people. Thanks to encouragement by one of our members, this old dog learned a new trick on how to record. And so I've probably been recording them maybe 3 years, but I don't know the exact amount, but I think you have them all.
Awesome. I'll just send you an email after I double check.
Hey, we've been doing meetings for 16 years, and none of the in-person meetings were recorded. And at times we had as many as 70 or 80 people come to our in-person meetings. And then we did a level 1 seminar. IBD sent 3 people up to Anchorage, and they put on about a 5-hour session that was fantastic. And there was about 40 people, and none of that got recorded.
Definitely the level 1, level 2. Have you ever been to the master class? The one
Yes.
that-
Yeah, I went to the last one. When was that, like?
December 2019.
Yeah, 2019, the one that Bill O'Neill, they brought him in. He didn't say a word to anybody, but that's probably the last time most of us ever saw Bill, was at that 2019 session.
You and me are in the picture, Floyd.
That was a pretty amazing, if I remember right, that was $5,000 a person, and I think it was about 150 people attended that one. If you do the math, I think IBD made a little bit of money.
told me that they didn't make any money from that. They actually lost money from that.
I don't believe that. They lost money after they paid all the speakers and paid the owners or whatever. But they brought in $600,000 or $700,000 of revenue, and my guess their expenses was at the most $100,000.
Probably not even that.
Yeah, I don't know how they lost money on that, but that's supposedly what IBD told.
And they've got one coming up in Las Vegas for $2,500 a person. I'm not going to go to it.
What is that? IBD Las Vegas?
Yeah, that's coming up.
Yeah, didn't you get a letter?
Yeah, it's a Founders Club meeting.
If you're a Founders Club member, you can go for free. And if you're not a Founders Club member, it's $2,500.
That Founders Club does not look like what we're studying.
You're going to have to edit that one out.
Speaking of everything, just had it out. I was like, Founders Club, space. Okay, got it. So the Founders Club, the other
Oh, there it
Founders
is.
Club-
Saturday, October 4.
yes.
I guess that's the one.
If you're an experienced IBD, you're not going to learn much.
The Venetian? Sure. Meet and greet. Wow, they got Mark Minermini, Mike Webster, Dan Fitzpatrick, Parrish, Charles Harris. Not bad. All the big name. No David Ryan.
David Ryan, something happened to him. I haven't seen a tweet since Thanksgiving.
Has his son still been tweeting or anything?
I follow David, but he doesn't send out that much. But he's never had a gap where it's been like almost a year.
Hope he's doing okay. I know he's getting up in age now. Oh, so if you don't want to go to Founders Club, there's another event that has a few decent names. So it's the IBD San Francisco Bay Area Joint Meetup. What the heck?
Yeah, that's the one.
That's in 2 weeks.
I'll meet you there, Haley.
Nice. I'll see you there, Rick.
It's renamed because Hans renamed it away from IBD. That's why it's called Growth Stock Investors of San Francisco.
There we go.
And when is it?
Oh, no, I'm sorry. It starts Saturday, the 26th, 7th,
Okay.
and it's 2 full days.
And I think you can attend virtually too.
That's the one I was texting you about, Floyd.
What's so many dollars for Zoom?
I did the Zoom last year and just loved the recordings of all the things. I rewatched them a bunch of times. There was so many good seminars there. I said, I have to go in person next year. So that's what I'm doing this year.
So
70 for the Zoom. That's a steal.
attend online.
It's 15 sessions over 2 days by 15 hours. Yeah, there's a schedule.
You have multiple portfolio managers for O'Neill. So you have Mike Webster there. You have Charles Harris there.
Steve Sweats,
Steve Sweat's there.
Amy Smith,
Amy
yeah,
Smith is coming? Nice.
Alex Marenko.
Oh, yeah. Alex Marenko's there, portfolio manager.
He's done at the end on Sunday. Rajiv Jain, you remember him, Floyd? Me and him worked
Yeah.
together for a little bit.
He's the guy that got on my case pretty hard and told me I didn't know what I was doing. And at the time he said it, he was correct.
Good job, Rick.
But you're laughing all the way to the bank now.
Thanks to him telling me I was all messed up, I dug my heels in and I says, okay, I'm going to figure this out. And thanks to you, Rick, we put our heads together and we figured it out.
Yeah.
Rick put in probably more than 1,000 hours of time and developed a spreadsheet where we could do back testing. It changed my whole perspective on leverage ETF investing and gave me brand new confidence that we had a system that would make money. And Rick was a very big part of that.
Thank you.
Holy moly.
You see,
A couple of times Rick told me I didn't know what I was doing too.
really? I was wrong. You knew what you were doing better than I did. At least with regard to investing. Lee Tanner's there also twice on Saturday and Sunday. Haley, I saw that you're attending in person also. I'm flying in from Houston to San Francisco for it. Look forward to meeting you in person.
Yes. Likewise, Rick. I probably live like 15 minutes away from there, 20 minutes maybe.
Oh, wow. Yeah, it's right near the airport.
So if you're attending in person, make the
So how
luncheon.
many places do you have for people to sleep there, Haley?
I do recommend sleeping at the hotel. Get to the bars afterwards. You get to meet Charles Harris. Everyone there is super friendly. Alex Marenko, Charles Harris. I've never met Mike Webster before and haven't really talked to much. Steve.
I met Mike Webster in Houston on a Webby walk almost a year ago, last November. He's super friendly guy, really nice. I asked him a million questions and he answered them all as we were doing this fast walk. My knees were hurting, but I was still asking him. A really good guy.
That's amazing to hear. Most of the O'Neill guys are just like friendly guys who are willing to share 100% of their wisdom without holding back.
Yeah.
So if you guys don't want to go to the Founders Club in Vegas, I highly recommend you go to the IBD San Francisco joint meetup. If you can't make it in person, go to Zoom and definitely go. If you arrive early, Rick, you should try going on Friday. Han's usually a little car trip.
I'm flying in Thursday just so I can do that with him on Friday.
You're going to have an amazing time. People just make friends, and the variety of trading styles people do is amazing, and they do well.
That's exactly why I'm going. I want to connect with more people. It sounds awesome. They have a Friday dinner and a Saturday dinner too. That's on that schedule.
I'll definitely be there for Saturday dinner. Friday dinner, I might not make. I have another event I have to attend. That's the problem with being so close. I pack my schedule. It's terrible. But come join everyone. If you have any questions, I've been to every single IBD San Francisco Bay Area joint meetup. I know most of the organizers like Greg, Hans, Ralph. If you want any insights, you want past Zoom meetings of stuff of that, I'm happy to provide them to you.
Oh, I would love it. I have to see if I have any before. I don't think I have anything before 2024. That'd be
Yeah, I
great.
have it since 2022, I think. But it's pretty much masterclass. This is now the true IBD masterclass for people who are experienced can slimmers to further their trading ideas. Steve Sweats last time would talk about earnings gap ups and how he trades in the after hours and also within the first 5, 10, 15 minutes.
Yeah.
So it's absolutely crazy. Michael Nesler, he used to work at Google. He probably made a very mid to high 6-figure salary at Google, and he decided to become a full-time trader instead. He has his own optioned ETF or option SPY strategy that he uses, and he shares with everyone too. The people here are just absolutely amazing.
A lot of detail. They're using NASDAQ futures, I think is what he does.
Yes,
But-
NASDAQ futures.
But last year too, Alex Marenko did one called How Do I Invest for a Living? And Ralph Desimone after that had one called Investing as a Business. Those two changed my life. It gave me a confidence I could do this for a living myself. I go to Alex Marenko as a coach, and it's really just completely turned around my trading this year. And it all started right here.
Okay, so that's the joint meetup. You guys want to go to Founders Club? I think we're still pretty good on the agenda. Who's the first time attendee here? I know we did the poll. Let me know how I can help you out.
Yeah, I'm new. I was recommended this group on a Discord I'm on. I wanted to join and just listen in. I've been recently spending more time trading. I used to be a buy and hold kind of person. With the last year, I've been shifting more towards being more intelligent about that. Just wanted to be here and see what your folks had to say.
Nice. This month, a little history about us. Floyd was the previous leader of this meetup, and I started taking over. I tried to bring people together and get ideas. Because one of the major reasons because it saves me a little time, and I'm working on the back end to make sure all the historical educational stuff are now firmly implanted in one place, so everyone has access to it. Which Discord were you in that recommended us?
Matt Caruso's service.
Gotcha. Anyone else, first timers? What are you looking for?
My name is Basi Khatmana. I got introduced to your IBD meetup through Matt Caruso's Discord channel. I've recently started trading for a couple of years now. I'm trying to soak in as much knowledge as possible on CanSlim and contribute when I've got something successful.
The success or failures, we welcome them both. I've had failures where I think I was 50% of my portfolio was invested into Fastly, and because I was doing really well on it, right? I was up like 70% or something. And then all of a sudden there was like a 30% gap down because they lost the USPS postal service. My months of gains is just gone, and I lost 10%, which honestly is not that bad because I gained like 70 and down 10% portfolio wise before. So I'm like, it sucks, but it's like we have situations where it's like we can't predict and we just got unlucky.
One of my biggest things that I'm trying to get rid of is fear. Like I've lived through both the .com bubble and the 2007-9 crash. And the second one is what really affected me from a psychological perspective. I've been really conservative, but one of the things that I've learned is to make decent money, I need to take risk and trying to get that under control. Yep.
I think most people here will agree with me. It's about portfolio management. It doesn't matter what strategy you use, but if you don't manage your own portfolio, which means your personal finances, your W-2 job, your own business, and also your investments, that's the key thing to do first. Some people you might see are crazy traders, but they're only risking 1% of their portfolio. And 1% to most of us is just nothing. But for some of us, we're risking 50% of our portfolio on a trade. So when our portfolio goes down 10%, we just lost 5% of our wealth. So just keep that in mind when you're listening to certain talking heads on the internet, including me.
Sure. I think that's one of the key things I've realized is to manage risk. And one other thing I've heard a lot about is let the market do its thing and don't overreact and overtrade.
Does anyone have Matt Caruso's Discord?
Like you have to be a paid member of the service.
Gotcha. Okay. And is Matt Caruso, does he have a website?
Yeah, it's Caruso Insights.
Oh, okay. So if anyone's interested, I'll just put this into the chat. So let's talk a little bit about leverage edge. There's a strategy that we follow. It was initially developed by Floyd, but Gary Taylor has really taken it further. And I just like to give monthly updates of what's going on. Where is he buying? Where is he selling? And he gives a very good updates. So this is his LETF, leverage edge strategy. Currently, it's in a buy mode as of September 5th, 2025. There's been a new buy after it sold on the crossover exit, and it's still holding strong. I do have it on my trading view, but I need to talk with Gary. For some reason, I don't have this 8-8 new buy, so I need to schedule one-on-one with Gary. So I want to trade leverage ETFs. So what does it look like? Which one should I trade? There's a bunch of ones, and it does differently every year. For example, some of us might have been doing extremely well in Soxel. Why? Because we didn't hold it from the beginning of this year. We might have bought it in April, and we might have made a very nice gain. But if we look at 3x home builders, which is Nail, this year, it only did 10%, but for the past month, it went up 36%. That's why he has 1 week, 1 month, 3 months, and year to date. Any other questions or remarks anyone want to say on this one? Cool. I'll share you guys this slide. The 2025 videos, 2024 videos, 2022 videos, all on OneDrive, and then all the playlists that's over here. So we all have access to it immediately afterwards. So there's one thing I want to discuss is what's current. Before I discuss about kind of like AI articles, interest rates, let's take a look at the overall market. So I'm going to change screens I'm going to share, and I'm just want to go to the markets, and let's just look at some indicators. Okay, there we go. We're going to look at the S&P 500. It's been trending upwards. We look at the NYSE advanced decline lines. It's been trending upwards. The 10-day moving average is pretty good. I'm in 100% cash. But what do charts tell us? Charts are telling us to be invested. The Buffett indicator is over 200. It's been over 200 since November of last year. So it's been almost a year now. Everything's been going up. Everything's trending up. We could argue that small caps are still lagging a tiny bit, but they're trying to catch up right now. If you see on my NASDAQ one, don't bother. It just trends downwards the whole time and doesn't do anything. We look at the Dow Jones, Dow DJI, and we can see it is trending upward. It is ever so slightly upward. RS line is low down versus the SPY, which is what it is right now. We look at NASDAQ. It's also been trending upwards. The slope is a little bit steeper. It's above the 10-week moving average, the 21-week exponential. So it looks okay. Look at the Russell. Same story, right? Looks like a channel. And it's slowly going up. Now, Russell, yes, it hasn't really hit all new time highs yet. But similar story of when we go on a channel, it's still so technically speaking, I should be in the market, but I have a few situations going on that I just rather be off the market. I do know when I get greedy, I tend not to look, and I tend to tell myself certain stories that'll keep me in the market when it goes down. That'll keep me out of the market that goes up, and it might be one of those situations. Anyone have any comments? More insights into how they think the market is behaving currently?
So you mentioned that the market is frothy, but
Yes.
the chart is telling you that market is good. So
Yes.
on what basis are you thinking it is frothy?
It's based more on just fundamentals right now. I don't think AI, we're going to get to this topic in a bit. I don't think AI, it's that productivity increaser that everyone's thinking. I think we've hit a plateau on the AI productivity. I don't think it's going to get that much better. I think it's going to increase productivity, but not at a scale of 2, 3, 4 times more for every employee. So that's why I think it's frothy, is because of that new factor. That new factor has been put a little bit too heavy, and I don't think the fundamentals are going to support it.
Okay.
I think that the jobs report is a big scam by the government, and I think it's going to explode upwards.
There's going to be a lot more new job openings.
A lot more unemployed people.
I am in the Bay Area, And what I'm starting to see is the median income is going up, but the unemployment rate is also going up. When I ask individuals, the lower level engineers, the college grads, cannot get a freaking tech job. The biotech people cannot get a freaking job. The mid-level guys are now getting the entry-level jobs. And the higher paid people are getting paid even higher to stay because people are trying to poach them. Meta is poaching people for $100 million salary. And that's absolutely insane to me. I'm like, how do you pay someone $100 million as an employee? Are they going to bring in $500 million in value? That's what you're saying by paying them that much value. Or are you taking away $500 million from another company to make sure they don't grow?
I agree with all the points you made, but how do you translate that into something that is actionable on the markets? These are all subjective things. You might think one way versus somebody else might think exactly opposite way.
Yes. Someone can definitely think my same exact reasons to invest into the market. Pretty much I take a look at my own psychology and where I'm at right now.
So I like to look at the data. I'm a data guy, so I like to look at the facts rather than my biases. I may think market is frothy, but is it really frothy? And what makes the market? You and I don't make the market is made by stocks.
Yes.
So if more stocks are going up, then the market is going up. Market by itself cannot go up. If you remove all the stocks, market cannot go up
yes.
because the whole market is made up of the stocks. So if you look at number of stocks going up, like percentage of stocks above their 50-day moving averages or percentage of stocks above their 200-day moving average, that gives you an additional layer of data, which is called market breadth. That tells you when it is good to be in the market and when you should be cautious to pay attention to the market.
So that does make sense for how you're investing because in spring you scaled back a bit. And I know the breadth indicators have been a little bit more positive lately, which means you've been scaling back into the market. So I do pay attention to breadth, but I'm like, I don't know. Maybe I'm still.
No, everybody has their own things, but I just try to quantify things based on the facts rather than our biases. What ends up happening is if you have lived through 99 bubble, internet bubble, then the last 2-3 years of that bubble were phenomenal. If you were out of the market, that was tremendous pain because everybody was making money. People who didn't know a damn thing were making money if they're invested.
Yep.
It just went parabolic at that time. And you can see from the graph itself, it's almost double or probably 100% move.
Just say 100%. It's
Right,
crazy
exactly.
in a matter of
2 years.
Yeah, if you go from the bottom here, from a low of 1,300 to 5,000. So in a matter of 98 to early 2000, a year and a half, tripled, quadrupled, ridiculous. Yeah. So
That's what it always does right before a crash.
yeah, but we get to experience hindsight when we look at this. We don't get to experience hindsight when we're investing in the market now. So it's like I try. If I miss this, I need to really reevaluate my trading. At the end of every single month, you have a blue bar. Oh no, maybe some scare, but hey, goes down to the 50 week until it goes back up. So it's like we're trend followers, right? We need to catch this. If we do not catch this, we need to reevaluate how we're evaluating what we call a trend or what I'm calling a trend. That was a fun little discussion about more technical analysis versus my kind of more feely analysis of stocks and my own situation. Anyone else have any more comments before I switch over to topics of how AI is affecting the current economy? I looked at an article from Gartner and it says generative AI spending is going to be rising. What I really like is the chart over here. This chart actually shows that we're spending a ton on AI and AI is definitely going to be that. And they're predicting it's going to be that productivity growth because they're increasing in almost triple digit percent. And as most of us do when we trade, when we see triple digit earnings or triple digit sales, something sets off for us. So especially for the services, because Gen AI will definitely help in, hey, I'm a real estate guy. Hey, my plumbing pipes are leaking. What is going on? Where should I check? Or the software side, hey, I want to write a website to connect different plumbers together and things like that. So I do want to ask you, everyone as a group, how do you use AI in your day-to-day lives these days?
When I use Google search now, I predominantly use the AI overviews. I check sources, but they're pretty accurate. I use AI to quickly write pieces of code that I don't feel like writing myself, and then I edit it and fix it. It saves me a bunch of time. And I use it to do research and to find additional stuff that I want to dive deeper into on various subjects. For example, like the other day, I saw a chart that I didn't understand. I'm like, why did this go parabolic in June and why did it crash? I asked Google that question and it gave me a good summary. So that's some of the ways I use it.
Is it AI mode?
For me, I've had mixed results with AI for sure. When I use ChatGPT or Claude or Perplexity or the Google AI mode there, especially the Google AI mode is returned. Sometimes it returns results I find suspicious, and I look in the links because it's very good that at least gives you the links to its source. And sometimes the sources are highly questionable, biased, like reviews of an app by the app itself, like reviews that are on the app. AI is listing them as a valid summary. And I've also used it for coding, like for coding a Python application I'm working on to do back testing. And I've had very mixed results, mostly bad results with the code that it writes, very simplistic, like high schooler level code with lots of bugs in it. And it has very little ability to debug. That's what I got rid of. Frustrating time with ChatGPT. I haven't tried the others with that yet. So maybe I'm expecting too much of it. I'm going to be breaking it down into smaller tasks for it to do with coding, but a lot of headaches with that. That's been my experience.
I had the same experience, Rick. You have to give it small tasks and be prepared to edit whatever it gives you. But it saves you a bunch of time to not write all the boilerplate myself. So I guess that's why I like it.
Yeah, if you're depending on it for both. I'm still learning Python. If it was a language I actually knew, C# or VB.NET, then I could debug it easier. But yeah, no, your points are well taken.
I'm going to do random callouts to people right now. Rick, I see you've been paying attention lately and your video is on too. Have you used that AI or what's your impression of AI?
No, I was the one who was just saying about the frustrating times with AI. Code with lots of bugs and summaries with questionable sources.
Rick Danielson, what do you think of AI has impacted your life?
I haven't used it at all for trading. I've been just watching it and seeing what it's going to do. I think it's very interesting. I have a son who is very into AI and he is working with different things. So I'm learning from him as well. So I'm basically not using it for anything aside from just learning about it and watching where it's going to go and being cautious. I do not like the commercials that they're putting on television. Some of the stuff they can do with AI, I don't think it's very good.
Based on the advertisement, the visual representation.
They're actually doing there's a car commercial. They've got 2 little children on there and it makes it look very real what they can do with that stuff.
Wow. Thank you for your perspective on AI. I'm going to call another person. I know this person's video has been on once in a while. His username is Half Trader. You still with us to give us your perspective on AI?
Hi, my name is Sanjeev. For some reason, I was not able to change my name. I'm not using AI for my personal life, but I've been using it in my professional life. We are using it to create what we call requirements because I'm in IT. So that's something we have seen. It is helping improve efficiency somewhere between 20 to 30%. And we are also using, someone mentioned to write code. So we have seen that if you are writing something new, it helps create a skeleton, saves developers time, and creates test cases to test the functionality that they are working on. Professional life, yes, I've been using it and it has been helpful.
Right. And Sanjeev, your name is written as Sanjeev.
Yes.
Beautiful. I spelled it correctly. I just renamed you from Half Trader to Sanjeev.
Okay, thank you so much.
You had a question or some insights?
Yes, I just wanted to give my perspective on how I'm using AI. I've been mainly using it for doing research on technology that I'm not aware of. So I use that as my first source instead of just using a Google search. I have a conversation with AI, and the one that I use predominantly is ChatGPT. The other thing that I use for is some coding help. So I've had the same experience as Rick and the other person, I think. So I've been giving small pieces of code and stitching them myself and get the coding done. The other aspect that I've done is, say, there's some documents I need to create a quick summary, I use AI to give me a quick summary so that I don't have to read through the entire article. The way I feel about AI is like right now, I think it's at the very infancy. I would say that it's similar to what we had in the internet. Like, just imagine dial-up modems and AOL coming in. I think we are in that stage of, if you had to take an NR, that would probably be the phase we are in. And I think there is going to be productivity improvements, but I think it'll take time and expectations need to be reset. Anytime a new technology comes in, there is going to be some amount of hype about it. Everyone is going to be like, I'm left behind, let me get in. And so there is going to be that hype initially, and then expectations will be reset, and then it'll mature, and then it'll move on. So I think there is hope. I think you just need to set your expectations correctly, the way I look at it. And I think all the companies, the way they're actually getting into AI is they don't want to be left behind. So they're basically people question them, are you involved in AI? If you're not, then you'll get dinged. In the medical field, AI is actually making a lot of improvements. I have folks who do research in drug discovery, and it's helping them quite a bit. Like,
Wow.
I think right now I would say that NVIDIA is the leader because it has both hardware and software, which is probably the biggest benefit that they have. I think they need a competitor, but AMD, I think AMD is there, but they don't have the software infrastructure. And then at the end of the day, it's all the other companies who can actually productize it, where they can get monetary benefit out of the investment. I think with any technology, there's always going to be pluses and minuses. As a human being, we have to be thinking positively and saying that there is going to be benefit out of the technology, and there is going to be challenges in between, but I think we need to be hopeful is all I can say.
Nice. Thank you.
I actually just wanted to add to what BK said about AI being in its infancy. I think most of us think about AI as being the chatbots that we see right now.
Yes.
But actually, there's a lot of really interesting stuff that's happening in other ways of doing AI. If you look at, for example, Google had a project called AlphaGo, where they taught the computer to play Go and it beat the world's best Go player. And it learned to play Go on its own. It's called AlphaGo. Yeah, there you go. So there's different ways of doing AI that are being experimented with by different companies. So right now, I'm seeing chatbots. They're probably one of the most primitive forms of AI that we will see in the next 5 years. The real advanced things can actually learn on their own versus having to be trained on pre-trained data sets. That's why people are investing so heavily, because they know the first person to get there will really reap huge rewards and the rest will reap much less. That's just one thing I want to call. So there's lots of really interesting talks. If you look on YouTube, this person called Demis Hassabis, he is the CEO of Google's DeepMind division, DEMIS. When you watch his interviews, he talks much more about the broader field, and it's really interesting to see where things are going. And so just extrapolating from where chatbots are today isn't necessarily where AI will be. The second thing is, for those of you who aren't familiar with the Gartner hype cycle, it's like they have this graph of technology and how it goes. The hype cycle. Yep. And so basically what they say is, at first people will have this enthusiastic view of a new technology, and there'll be lots of excitement about it. It'll get to the point where at some point people expect so much from it that people will give up on it and get disillusioned. Then you'll really see how it actually reaches its true future. I think we're probably in the first part of that curve, not even like nowhere near the peak. Like we're somewhere the bottom 1/3 of that curve in terms of the AI hype cycle. That's my impression. Now, obviously I could be wrong, but that's my sense.
I don't know what to think about AI. If I would agree with my own past self about an hour ago, I say we're already here. But I think we're in agreement that we're still somewhere around this area. We're definitely not on disillusionment or plateau of productivity yet.
I agree with the person who spoke. I don't think we are anywhere close to the peak.
So if you have to find an analogy for the current cycle, right? So NVIDIA is something similar to Cisco back in when internet was coming up. Cisco was the one who built all the infrastructure for the internet, which is what NVIDIA, AMD is all doing right now. The problem is all these other companies building AI models, they are building them, but they really don't have the ecosystem, or we are simply not there yet where we can use these models to do something meaningful for the society as of yet, apart from searching and apart from researching and writing code. If you watch videos from Eric Schmidt, ex-CEO of Google, he talks about San Francisco AI thinking. He calls them a separate group because they are in their own world. His vision is that and I'm still trying to make the analogy with what happened in the internet. In 99 or 98, there was talk about e-commerce. But people really didn't know what the hell is e-commerce. You sell on the internet, but how? And what do you? And Amazon came out of the winner from there, but it didn't really took off until 2001 to around that time frame. And that's when companies started realizing, other companies like Apple and other folks started realizing, oh, wow, we can use this as a business model and build an ecosystem around it. And that's when the iPhone and all other things came around, and the Android system and the Apple Store and all those things started happening. So that's the plateau stage. We are certainly not there at all. But what takes us to the plateau stage is AI agents. We are already hearing the talks about it, but it's there in a very minimal fashion as of today, because companies are still trying to figure out, okay, how the hell I use it in a way where it's meaningful and I still control it. So I think we are not at the peak. Maybe, I don't know, but probably going towards it somewhere. But the draw down will be very harsh because so much investment is being done. If there are no returns, investors are going to pound on your door. When you're paying $100 million to a developer, then what happens? The drop will be harsh because the expectations are built up and we are not seeing the productivity. Many companies are trying to get into it just for the namesake that, hey, do you use AI? Yes, we do. Because if you say no, that's
That's a problem right now.
so that's where we are right now. The drop will be very harsh. And if you're not prepared for the drop, that will wipe out companies.
And the other issue that is happening, they don't understand. They attend a conference or talk to the salespeople and come back and say, we need to cut our workforce by 30% and use AI. They have no idea what they're talking about. Those are the use cases where companies might have issues because it has to be thought through. How can you leverage your company from a technology and process perspective and then figure out how to reduce your cost, but not just blindly saying cut 30% and use AI.
Yeah, that's so. For folks who, since I heard a bunch of you guys use AI for coding and you had some mixed results, I use AI for coding, not in my workplace, but in my free time, because I do a lot of strategies on TradingView or Think or Swim and other platforms. If you are doing it for coding purposes, start with very basic and very targeted. As an example, I want to write a script where it shows me a stock that is undergoing consolidation after 30% rise. So you have to be very specific to what you want. Then you get around 90% of the code right the first time. You still need to know a little bit of coding errors here and there. But if you get an error, don't worry, just give it back to the AI and say, hey, I'm getting this error. It'll correct it and give it back to you. After 2 or 3 iterations, you get the perfect code. Once you have that code, now if you want to add something more to it, then you go back to the AI and tell that, okay, this is my code. Do not change anything in the code. Only give me additional code for X, Y, Z. It will not change your existing code. It will only give you additional code or only required statement that needs to be changed. And I've built really complex script using that, and it works. So try it out. And ChatGPT is the best. I've tried Perplexity. I've tried Gemini and other platforms, but ChatGPT has a winner for me.
So you tell it to add a very specific criteria, then you just add additional code according to the past code instead of rewriting the whole code base.
Correct. Because I don't want to mess up my original code that it gave me and that is working fine. So I tell the AI that do not mess with my code. Just give me additional code or only statements that needs to be changed. And then it will give you the extra stuff. If you let it do what it wants to do, then gone. You have to start all over again.
Oh, interesting. I'll try that because I've always told it to rewrite my whole entire code and I just get frustrated.
And that used to happen to me as well. But I realized that's not how AI works. After I was watching Eric Schmidt's video where he talks about AI agents. And in future, which is the plateau stage of AI, where you go to buy a home. So today you go to Zillow. I'm giving you a future vision of what AI will be doing 5 or 10 years from now. So if you go to Zillow, you search for a home, then you call your realtor, and then all the process starts. Essentially, Zillow will have all different agents doing all the work behind the scenes. So all you have to do is go to Zillow and say, hey, you find an agent in a specific area. You want to find a home in a specific budget with specific criteria. And it will find homes that fit your needs. This portion of the home should be on the south side or east facing, west facing, all those kind of stuff that we like to do. With this much square footage and all that stuff, it will find the right 2-3 homes for you. So you don't have to go through all the listings. You get the email, or you don't even get the email. You have a workflow set up. So as soon as it finds the home, there will be another AI agent that kicks off. It will start the process of listing your appointment to go and have a virtual viewing or go in person. You just get an email saying, hey, you're already set up. Please go take a look. You go there, you take a look, or you have a virtual viewing. Once you're done, you simply reply back saying, yes, looks good. Let's start the next step. The AI agent kicks in. So everything is done with different AI agents. These AI agents are very task specific. So one agent is not doing everything. That's what eventually all industries will be doing. And that is where a biggest reduction of workforce will happen. That is where universal income will be established, which is already being done in a couple of countries, but it is coming, whether we like it or not.
Yogesh, I have heard you mention several AI engines, but I have not heard you mention Grok. Is there a reason why you're not using Grok?
No, I have used Grok, but not for coding. Somebody mentioned to me a value model, and I didn't have access to other models, AI models. So I just said, okay, Grok is there. Let's try Grok. And it does a fairly good job. I just haven't used it for coding purposes. I don't know how good code it writes, but probably it's good. I haven't just tested it.
Thank you.
I just remember regarding Grok, my son is getting married recently, and my wife and I were talking about his speech, and I gave some characteristics about my son and the would-be daughter-in-law to Grok, and it did a pretty good job creating a speech for us. It's 80% there basically. So yeah, I think Grok does a good job on certain things.
Thank you, Yogesh, for actually breaking down AI and how to use it in its current model before it starts going into different models like AI agents. I'm going to jump over to a few charts. I put together one slide. These are the top 5 gainers from IBD of 2024. So in 2024, there's the top 3 sectors, which is communications, financials, and consumer discretionary, 33.2, 28.5, and 25.5% respectively. And for the top 5 gainers in 2024, it's AppLovin at 741% gain. Planeteer, as we all know, 360% gain. Celestia at 224% gain. NVIDIA at 176%. And I couldn't believe this one. Sprouts Farmers Market, 167%. Who would have known? If you want to take some studies after this meetup, these are some sectors to look into and also some companies to look into and how did we trade it or how did we miss it in 2024. I'd like to remind everyone, September 17th, there is a potential interest rate cut and there's very likely going to be an impact on stocks. I should have written interest rate announcements. But we talked about the joint San Francisco meetup. We have one of the people who organized it in our own chat, Ralph Desimone over here. Feel free to ask him any questions. He is an expert negotiator and a very good, and he was a presentator in last year's IBD meetup.
Hey, Hallie, you mentioned that Michael Nestler uses option strategy. Is it available somewhere to read about it?
He has a newsletter I signed up for, and he puts out periodic email updates on how his fully algorithmic trading system is going.
I'm interested in the science of that system. Does he share that, or it's a black box system?
In my impression, it's semi-black box. He said, I asked him specifically, like afterwards in an email, what are your rules that you're using in there? And he said, I'm not going to explicitly state them, but they were all in my presentation last year in 2024. So basically, yeah, that's what he says. They're all in there, and I didn't go back and try to dig it all out. But basically, he's using futures. He's using NASDAQ futures as leverage to attempt to beat the NASDAQ. I haven't looked at his emails lately, so I'm not sure how it's going. It wasn't blowing anything out of the water last time I looked.
It's not available on the internet anywhere.
No.
I haven't looked, but not that I know of.
Thank you.
I'm actually going through his slides right now. I know Michael told me not to share his slides, so I'm just going to share a snippet and hopefully he won't kill me. I won't. So I'm going to share this part of it.
Do they still have links to the videos of last year's meetup online?
I'll check with Greg on that. I want to say no because it takes up a huge amount of storage, like probably hundreds of gigs. He did
I
back
think-
testing and stuff, but it's the NTT specific. He probably did some earmarking on the slide, so I don't want to show too much. Email Michael Nesler and ask him if we can get the slides for the NTT system.
Thank you.
You're welcome. And I'm gonna unshare the slide. I'm gonna share Michael Nesler's email inside the chat. One moment.
Haley, I just found the webpage where they put all the videos from last year's joint meetup. Do you think it'd be okay to give that to the group who didn't pay for it? I don't want to get Hans mad at me or anything, but
Let's ask
maybe-
Hans.
yeah.
Let's ask Hans that. He put a lot of time and money towards making this happen, and he's not trying to make it rich from charging people $78 for a Zoom meeting from
Yeah.
getting world championship creators on Mike Weber. Let's ask him out of respect.
I agree. Do you know the best way to reach him? Through email or through WhatsApp? I have his phone number. I sent him an SMS, but didn't reply for a couple of days, so it's probably not the best way to reach him.
I would email Hans.
Trying to reach.
Hans Overturf, the person who runs the joint meeting.
Yeah, Hans would be HANS OVER turf and the number 1. So Hans over turf and then the number 1 at gmail.com.
And I think that he's open for anybody who pays the fees to give access to all of the presentations from last year.
Thanks.
I'm copying his email. I'm putting in the chat. And I'm also getting Michael Nesler's email in case you want to ask him for the NTT slides, if he lets you. I want to make sure. So Hans Overturf and Michael's Nesler.
Haley, can I make an observation about the joint meetup for this year?
Of course. Welcome it.
The lineup of presenters that we have is as good as I ever seen at any level 4 or 5 meetup that Investors Business Daily put on for between $5,000 and $7,000. And people are able to participate from Zoom. It's a totally cheap rate. And we're going to have questions for each of these people, Mike Webster, Charles Harris. We're going to let people ask questions, including the ones that are participating on Zoom. Sign up. There's no limit on that. I think we're close to being filled up. We even had to increase the size of our room because there's such a demand for the in-person. Sign up and have your questions ready, and don't be bashful about putting your questions in the chat because we'll ask them during the day. Thank you.
Very cool.
Thank you, Ralph. I wouldn't be surprised if one of these managers managed $100 million. So we have about 13 minutes left of the meeting. Let's look at some charts. What does everyone think about today's format? Do you like the discussions? Do you like the topics I bring? What do you guys disliked about today's meeting?
I have enjoyed it. I've enjoyed both parts of it, the discussion and your presented materials. Very cool.
Thank you.
The discussion is very kind of free form. It's not structured. We went from subject to subject.
Yes, I'm trying to pretend to be a moderator. I try to butt in when needed, but there's some very smart people here, people who are definitely smarter than me. And I would like to hear their perspective. Like Yogesh, he's very data heavy and he just taught me how to use AI better. And I probably use ChatGPT most hours of every day because it does really help me in my day-to-day work.
What day-to-day work does it help you in?
So
Particularly?
it helps me in drafting emails and communication. I can speak to ChatGPT in free flow thought and it'll organize it into a professional email for me. Because as you can probably already tell, I'm not the most professional at times. Literally, my shirt says Game of Chokes. I like to do martial arts and choke submissions. That's not very professional. In a real estate setting, when I'm talking to vendors or I'm talking to clients, I'm talking to tenants, I need to be a little bit more professional to make sure I don't get myself or the people I'm helping in trouble.
Gotcha.
Anyone else have comments? Sam, I saw you on video just for a second. What do you think of today's discussion?
Sorry, this is first time I'm joining.
Welcome.
Thank you. I joined. It's interesting.
Were you able to get anything of value, learn something that you wouldn't have learned if you didn't attend?
I joined when Yogesh was talking about AI and how it's going to happen. So that's very interesting insight and some of his recommendations not to do with ChatGPT.
Thank you, Yogesh. Thank you for the insight and educating Sam. How about you, Dave? What do you think of today's meeting?
Thank you.
If you're speaking, David, your microphone's off. Maybe you stepped away for a second. How about you, Peter? Peter Ing. All good. Maybe the third time's a charm. Frank. Frank, what do you think of today's meeting?
Some quiet people.
Yeah? Okay. Maybe that's the universe telling me. Let's look at charts.
I'll give you a couple words.
Welcome.
I thought a lot of the discussion was really great today. Very interesting. However, this is a leverage ETF group. Maybe I stepped away at the wrong time, but I didn't seem to hear a lot about leveraged ETFs. Am I right or wrong?
You're correct. There wasn't a lot of discussion. The main discussion was update on our leverage ETFs strategy, which was over here in that the Courage Leverage Edge, how it's been performing, and it's currently in a buy zone. Nail's been doing really well in the past month. This data has been updated as of September 5th, and other leverage ETFs that was happening. That was pretty much most, if not all, the discussion I had on leverage ETFs. It's been going a little sideways in the market. Actually, that could be our first chart we look at. It hasn't been going bananas. It's been going in a sideways consolidating market right now. As you can see in the past month, there was a stalling week over here, and it's been just, I'm gonna make this bigger. If I'm having trouble seeing, I'm sure I'm not alone. That's too much. So we see the stalling week that happened over here, and it's just been going sideways for the past month. There, you might have heard some talking heads saying September is typically a pretty volatile week. I was reading into Dennis Wilborn. He's one of he runs BAM, Bay Area Moneymakers. And he was like, hey, December is typically highly volatile, but if you can survive December, historically, it has been going up 20%. I think I might have the YouTube of that because I just watched it.
I'm not touching.
I think this is Dennis Wilborn. Thank you, Floyd. So I think this is the interesting part. Oh, Scott, by the way, thank you for bringing up this topic. I do have lots to talk about leverage ETFs. I do watch videos and do look at growth stocks. Dennis did an interesting analysis. Turn off CC because it's blocking some of the data. There was a drawdown in September, and then he got back in sometimes in October, sometimes in November. There was one time in December he got back in, but most of the time he says if you avoid TQQQ or leverage ETFs in September, you can have a pretty substantial gain. You're not going to have this maximum gain that you see that averages 45%. You're going to see probably like maybe 30%. And generally that's pretty much this whole entire video from Dennis Wilborn. How much you trust him, how much you think about his strategy, how much you think he's back tested, but he has been trading for quite a little while. So I'm going to put this in the chat link if people want to watch the video at their own time. Thoughts, comments?
Yeah, Floyd, my only comment is every year is different. And so far, anyone having doubts about September, now we're only in the first 11 days, but September has been wonderful.
Yep.
And every year is different. My advice would be if you currently hold TQQ, I would not sell it based on Dennis's video. I'd wait and see if I get a downturn on the stochastics, and if I get a sell signal, then I would sell. Let the charts and your sell rules tell you what to do with what Dennis has done. He's a good guy. I like Dennis. He's spoken to our group 3 different times. He's giving you an overall seasonality view of TQQ, and in general, we get sell signals in September, late August or September on TQQ. So far this year, that hasn't happened.
I just checked. The TQQQ is up 7% for this month after 11 days. It's definitely not down.
Yep. And we look at Dennis Wilborn's seasonality chart from from January 2000 to July 2025. Pretty much says almost right when we hit December, it typically goes down, tries to bounce back, but doesn't usually bounce back. And right now we're bucking this trend up, this 25-year data now.
So I'm looking in September, it was up in 2024. In 2023, it was down, but then so was July and October. 2022 it was down, but in August, it pretty much was for the year also. Every year is different.
Counter-cyclical cyclical to all this stuff, and I own it, and that is NUGT. And that thing's been on a rocket ride, unbelievable. Look at those bars, it's up over 100% since January. Look at GDXU, it's up over 200% since January. Do you know how to use the comparison window that looks like a little, yeah, the one that looks like a window pane? Click on that. I think it might only work for the daily.
Which two did you want to compare? GDXU and click on
Daily. Now click on the comparison window. If you click the window pane, it should bring up a new window that's 1 year in duration. Put in TQQQ, put in SOXL, put in NAIL, put in UPRO. So you can see the triple leverage gold miner beats everybody. Put in Nugget, NUGT, that's the gold miners times 2. So you can see that GDXU is up 485% year to date. Unbelievable. Nugget's up 269%. And so it's just, if you're aware, put in KORU. That's Korea. And put in YINN. I think that's China. So look at Korea, China, and the gold miners are beating all the levers ETFs like you wouldn't believe, like the ones that we like to look at, like TQQ. But this could be a very temporary thing. And my bringing this up and talking about Nugget and GDXU is not tell anybody, don't run out and buy it now. The thing is way extended, and we're probably overdue for a correction in gold prices, but I would have said the same thing 45 days ago. I'm watching my Nugget very carefully. I got in at about $42. And it's now 120 or something. I'm watching it very carefully, and I'm looking at a stochastics chart. And if I get a sell signal, I guarantee I'm going to sell it, because once it starts correcting, it could be fairly significant. But right now, on the levers ETFs, China, Korea, and the gold miners are beating the tar out of TQQ and SOXL and NAIL.
And I don't hear much publicity about that. And I don't hear many other people talking about that at all. So thank you.
So you go where the action is, but you have to be aware, if you have a wide screen of levers ETFs, you can very quickly tell where the action is, where the money is going, and where the profits are. But I view this GDXU and Nugget as a temporary, wonderful thing. I don't expect it to continue. I expect a correction. So I'm watching my Nugget. I got a lot of shares on Nugget. Pretty major investment, and so I'm watching it very carefully, and if it rolls over, I guarantee I'll be going to cash real fast.
So for Nugget or GDXU, the big move came from late August. Like 50% move actually happened because gold break out to all-time high after consolidation.
Yeah, you said late August.
Oh, late August.
Yeah, right there.
Wow. Last was 74. Currently is 129.
But I got in like at 43 back in about February. I got in at a good enough price that when it did some minor correction, it didn't bother me, because I was still in a very profitable position. I've sold calls on it a few times, but now I'm getting nervous. I don't want to sell any more calls because it's going up so fast that my calls will go in the money and leave me standing there wondering, why am I not participating in additional? I'm just bringing this up as an observation, no recommendations at all. If you watch the levers ETFs, foreign countries, the commodities, the indexes, every year there's a significant opportunity to make money.
Do you have a good way, Floyd, of screening for the leverage ETFs in MarketSmith? Like for these ones, do you have any good way that you found to screen?
Oftentimes I start by reading the IBD newspaper on Saturday, and I go to the ETF section, or you can look at it online. They have an ETF page that has a summary of leveraged ETFs and 4 different sections. There's indexes, there's overseas, there's commodities, there's technology. And so I start by looking at the IBD weekend page, the ETF page. And then I think it was August or somebody here about 3 or 4 months ago brought my attention to yen, YINN. And then I started looking at yen, and then I found KORU. For some reason, KD had KRU on their ETF page for quite a few weeks, and then all of a sudden it disappeared. And I'm not sure why they kept showing it because KRU has done good. But I'm trying to answer your question. I don't have a real short way of doing it.
KORU, Haley.
Thank you. I'm trying to
Yeah.
look for that IBD leverage ETF right now.
So if you look at a daily chart, you can see what it looks like year to date. So if you go back to December 31, it was $34, and here it is almost 100 in April. Everything was correcting in April, got all the way down to 27. So if you paid 34, you might have got shaken out, but I think you potentially would have gotten right back in within the next 2 or 3 weeks.
So Scott, thank you for your question and your comment. This got to be a very interesting discussion about leverage ETFs. Any other questions or comments before we end tonight's meeting?
Novice guy, but you generally get advised not to hold the leveraged ETF because it can because of some kind of decay in that. So,
ETF is the escalator up and the elevator down. You go down a lot faster than you go up.
so in this example of the GDX, it was constantly going up, so that was okay.
Yes, it's constantly going up. Holding anything is okay.
Yes, so you trade leverage ETF only with a system. Floyd has laid out, if you haven't had a chance, go through the September recording. Hallie put it in the chat. You might want to check it out. That gives you all the parameters of how you should use a system to trade leverage ETF. So that when it's taking the elevator down, you get out at the top floor and not wait until it goes to the bottom floor.
But it wasn't. Okay.
Or maybe if the building's 50 stories high, you get off at the 48th floor because you're never going to get out at the top, but you want to get out before you get to the 25th floor. If you're going to trade leverage ETFs, however you want to do it, it's up to each person. You need to have really back-tested solid buy rules and sell rules. If you have confidence in your rules, let the rules tell you what to do and not let your emotions tell you what to do.
Here's a good chart of why you do not hold leverage. If you're holding QQQ, regular NASDAQ, you would have made more money than holding the leveraged TQQQ. And this appeared over 4 years, from September 2021 to September 2025.
Yeah, and it's particularly because of those drawdowns. Like I've studied this a lot, and look how long it take for TQQQ to get back up to the November 2021 highs. It took months and months longer than it took QQQ to get back up to its highs. So if you sat through these giant downturns, you have so much more ground to make up.
Yep. You need a strategy to trade triple leverage ETF.
If you're in leverage ETFs, you have to have the mindset that there will be times when you'll be sitting on cash and you have to be okay with sitting on cash. But what you want to do is you want to have your cash in reserve so that when the buy signal comes, you mobilize that cash. What we're trying to do is maybe gain about 2/3 of the run up and maybe only experience 1/4 of the downturn or some variation of that. So you're not trying to get the exact high or low, but if you can get 2/3 or 3/4 of the run up and only experience 1/4 of the downturn, you can make a significant amount of money over 5 to 10 years, not in 5 to 10 months. But if you have a long-term outlook, our back testing has shown cases where there's many thousands of % of gain just following the buy and sell rules.
It is imperative that you do not ride these triple leverage ETFs down.
Absolutely. It can be quite demoralizing and can screw around with your psyche and maybe even a little bit of your physical health. Let's say you have $1 million in TQQ and you're in a buy and hold mode, and 4 months later, your $1 million is only $250,000. Are you going to be sleeping? How are you going to feel about things? Are you going to be enjoying life? Or are you going to be saying, man, you're a moron. Why did you do that?
If you compare the returns from around 2017, it is phenomenally awesome because markets are trending. They go up very fast, they go down very fast, and they recover very fast. So leveraged ETFs work phenomenally well if you have a system. But when markets are not going up fast and they are choppy, like 2016 or 2015. Or if you, unfortunately, before that, all the leverage only started in 2010. So we really cannot go back before the financial crisis or around that time frame to see what would have happened. So that's where leverage does not do well. You will get chopped out a lot of times.
Yes, in the choppy markets, you could be down 15, 20, 30% in a fairly short period of time because every buy and sell decision ends up being a loss. And you start accumulating losses. So one sort of side rule that's not really published is if you have 3 losses in a row, just stop trading because you're in a crazy market that's not working. So if you have 3 losses in a row, go to cash and wait for a different market.
I'm not touching TQQ this September.
That's me. I remember that happened last time in one of my meetups where a video started playing. I'm cognizant of it now. But
Just one comment about backtesting with TQQQ before it existed. I found that if I just modeled buying QQQ on leverage, so 300% QQQ, with a certain cost, it actually gets pretty close to the results of TQQQ. You can use that algorithm to backtest before TQQQ existed. So you can just use QQQ, model 300% of your portfolio with a 6 to 7% holding cost, and it comes pretty close.
And the other thing that I think we're maybe not saying directly, Floyd here, backtesting only has so much value. I've heard someone say the future markets aren't the same, but sometimes they rhyme. If you develop a set of buy and sell rules, I would say if you've been trading them for 2 or 3 years, go back and redo your backtesting or whatever and see if your buy and sell signals need to be modified because we can only tell you how it's performed in the past. We can only estimate how it might perform in the future. If we get into a sideways choppy market, and if you're not careful, suddenly your account can be down 20, 30, 40% before you realize, hey, my rules aren't working. And so you got to use some wisdom here. Those are all very good comments. I appreciate people jumping in and making the comments the way they did, because the goal is for all of us to help each other and learn what's working, what's not working, so we can improve as investors.
interesting thing Yogesh said in 2014 and 2017. So I just did a backtesting date. Let's say you're using a triple leverage ETF. You might get really pissed off if you find out, hey, for 3 years, I got a 12% profit. And if I held in the past 3 years, I would have made 29% without doing anything. So that's the life of a trader. Sometimes for years, I just might get slapped left and right. And we spent so much time and effort just to get for 12% gain, only to find out that your buy and hold return was 29%. And
Right.
sometimes that's the trading life of triple leverage ETF. It's not all sunshine and rainbows as it's been for the past few years. So be careful, everyone. Any other last comments, suggestions, feedbacks?
I think at Floyd here, I think it's a good group, and I appreciate as many people speaking up and joining in the way they did. So thanks, everybody.
100% Floyd, 100%.
My final summary is be careful out there.
How about them Cowboys? If you haven't seen the Netflix series on the history of the Cowboys, it just came out recently. It's actually pretty well done and shows some of the personnel trials and tribulations of the Cowboys and the things they've done over the years. It's for entertainment.
Awesome. So everyone, thank you very much for joining in on our monthly meetup. Be on the lookout for our next month meetup sometime in October. So
While you're looking there, I see the ETF section of the weekly IBD paper it's page 8, as starts with the best ETFs, like what Floyd was talking about for screening.
October 9th.
Floyd, October 9th. Woohoo. And I'm just calling it the legs meetup. I kept on saying leverage ETFs and growth stocks. And I realized, hey, we can just call these legs. We're not playing options. I think it might be a little catchy. Legs meetup.
It's not bad. Leveraged ETFs and growth stocks should give your portfolio legs to really move.
Yeah, I was just making this slide and I was like, wow, I can actually make a word like easy accidentally. No complaint.
Just a final comment for the newbies here. My main advice would be as you study and as you get in the market and investing, Make sure that you do it in a way that you're having fun and you're enjoying life and you look forward to your future trades. And it shouldn't be a drudgery. You shouldn't have emotional pain. As you sharpen yourself up and you get more comfortable and you have good buy and sell rules, you can find it quite enjoyable. I find it extremely enjoyable. I get up, the market opens at 5:30 a.m. in Alaska, and I'm there every morning at the opening looking for the next opportunity.
Thank you, everyone. Until Thursday, October 9th. I'll see everyone then.
Thank you, everybody, for great insights. Appreciate it.
Thank you.
Thanks. Thanks, Haley.
You're welcome.
Thanks, guys.
Okay.